Hello and good morning, listeners. It's another smashing week for the currency markets after an eventful end to the last week. Now, this is once in a decade kind of space for currency markets, and we are glad to bring you the latest and the live updates for financial markets through Almus Market Mornings with me, Shikhar Garg. Now, there's nothing else that we can begin our session with. It's GBP. The currency is being smashed, and investors were seen scampering for an exit over the speculations of the government's economic plans. Now, this is a classic example of the game theory I keep referring to. The central bank is one of the elements working with certain objectives, tightening the economy, while on the opposing side is the government as the element with what seems to be an extremely different set of objectives when Quarting was seen vowing for further tax cuts. Now, it's extremely a different set of objective, as we mentioned, and this clash of actions for a not so uniform target looks to have put GBP in the pounding list. Now, USD INR also made a new all-time high. Euro made multi-year lows, and equities. Well, what could happen with equities in such cases? They're hammered. So, with so much at play, PR, can you brief what should we be expecting and what's exactly going on in some detail?
Thanks, Shikhar. Good morning, everyone. It's basically it's a continued strength for King USD, and it's again proved that whenever the risk is there, whenever the uncertainty is there, investors are running towards dollar. All other currencies are falling hard against it. And you can say that it's the impact of a continued Fed hawkishness and geopolitical issues which are coming up. US clearly warned Moscow for catastrophic impact if Russia uses nuclear weapons or nuclear options against Ukraine. What we saw is basically Euro fell to a fresh 20-year low, and GBP fell to all-time low against a surging dollar. Now, all this happening more because of a sterling this round, because Britain's new finance minister has announced tax cuts and provided support to corporates, and which led to a total layout of a 72 billion pounds as a plan. Now, how they will be funding it, they have not actually clarified. So, it's the bond market took very negatively. GBP 2-year yields, which has reached 4%, and US 2-year yields have also is basically moving towards a 4.5. And now all these have impacted bonds also. 2-year bonds, which is European bonds, has also moved to 2%. This all leading to a one only thing is, as of now, dollar looks like a safe haven to everyone. Currently what we are seeing is the GBP dealing around 1.0560, Euro at 0.9650. JPY as of now holding because Japanese authorities have intervened around 146, which is now USD JPY at 144. We are also seeing USD CNH is now scaling back towards pre-COVID level of 7.20 against a dollar, currently dealing at 7.16 per USD. It's continued to weaken. There are rumors that Chinese equity markets are getting supported by some undisclosed hands, and that's very important. Central banks are acting all across all asset class. We are seeing that yields making new high every day. 2-year USD made a high of 4.27. 10-year USD made a high of 3.82%. Now, 10-year USD is currently dealing at 3.75. 3.90 looks like a next resistance level. Bond markets, or basically a fund futures market, has started pricing 80% probability of next 75 basis hike on 2nd November. Emerging market currencies also started facing jitters due to higher interest rate scenario and tightening liquidity. All LATAM effects like Brazilian real, Mexican peso, Chilean peso, Argentina, along with the Asian currencies, Korean won, Indian rupee, all fell very hard on Friday, and looks like they would continue some today also. And that attracted a central bank intervention in Korea specifically. They have clearly laid out how much money they will deploy to protect their currencies. Equities also had a very bad day on Friday after confirmation of S&P 500 and Nasdaq in bear market as defined by 20% fall from peak. US main index, prime index, which has been there for years and centuries, Dow Jones 30 also fell more than 20% of its recent highs, confirming a bear market. Due to higher interest rates and expected global slowdown, crude oil contracts are also trading lower. Brent is trading at 85.20 low, which is a post low Russia-Ukraine conflict. Everything looks like as of now is in a risk aversion mode. Gold has continued its fall due to higher USD index and increase in real rates. Gold dropped below 1650, which was holding for last 2.5 years, currently dealing at 1640. I would say that gold has been relatively fallen much lesser than the other currencies, hard currencies, or maybe on a fiat currency, not hard currency, fiat currency. We are seeing some kind of a consolidations move in cryptos. Bitcoin, which is trading below 20K per unit, but not showing much of a weakness. Now, coming back to India, RBI was there intervening on the Friday at closer to 81 rupee, 81, 20, 25 range, which helped a rupee to close at dollar rupee to close at 81. Today's, I think RBI will try to cap 81.50. How the market moves, let's see. 81.35 itself is a strong resistance, but it looks like it will open higher than that. Next, we will be waiting for RBI MPC, which is scheduled for this Friday. My expectations that it will be RBI would be raising 50 basis point, because till now we are outside the inflation targeting framework. We are higher than the higher range of a 6%, which RBI takes as a benchmark. So expecting a 50 basis rate hike in RBI forthcoming monetary policy. That's all from me. Thank you.
Okay, Pankaj, that was quite good, and I think all the currencies against dollar and equity markets as well, they need some sort of a helmet, as they've been falling to the ground quite hard. Whereas it seems that gold and cryptos have had their parachutes on. There's not much action over there. What we would like to put forth or reiterate is the fact that geopolitics have still not taken a backseat, even though the central banks are struggling in managing what looks like to be an unleashed animal in the name of inflation. US was seen warning Moscow about the catastrophic effects if they start using the nuclear armory. On the other hand, JPY was seen, controlling their slide as the Japanese central bank was seen intervening, while CNY continues to weaken towards its pre-COVID levels of 7.20. All in all, we are seeing new highs for almost all currencies and new lows for equities and few currencies against dollars. So there's a lot of action on the all-time high or all-time low side for a lot of instruments in the financial markets, folks. There's a lot of jitters, even with respect to EMs. There's a lot of jitters. So it's good that we have to keep tracking this space, and we'll keep bringing you all the updates. Latest round of important actions would be given by our own central bank, RBI, by the end of this week. So we shall keep our seat belts on as we move towards the also hunky-dory ride of financial markets. We'll catch up again tomorrow morning with another round of updates. That's it for today. Thank you so much for listening.